Good morning, everybody. Welcome to, what do we hear? Game plan? I love it. I do so many shows a day sometimes. I sometimes forget, but it's okay because everything about charts is right up here preloaded for you guys. So we had lots of data this morning. We got the PPI numbers out. That's Producer Price Index. It measures inflation on the side of the producer. All right, so I'm going to go over those numbers. We also got jobless claims. Jobless claims spiking. Those are people filing for unemployment. So again, to me, even though we got a good non-farm payrolls number last week, as we always know, they revise those down. My guess is the labor market is certainly getting weaker. So we're going to cover that. We're going to cover the big movers of the day, the charts that are in play, and let's get right to it. Welcome to the game plan, guys. All right. Let's go right into it here, guys. So first and foremost, we got to talk about the S&P 500. So yesterday we had the S&P 500. The day started out with a bang with the CPI data. What happened? Well, basically what we saw is the CPI data came in much lower than expected. The markets just ripped. We saw yields dropping, the dollar dropping. Everything that makes the market go up was coming down. And again, that was coming off of last Friday's non-farm payrolls, which showed the economy was pretty strong. So everything seemed perfect. Then we came into the Federal Reserve meeting yesterday, the unveiling. They didn't move on interest rates, but surprisingly, Jerome Powell was pretty darn hawkish. Now, you could argue that he had the ability to be hawkish because the stock market was already up in the stratosphere. I think that's partially it, but he guided the market to just one rate cut this year. All right, the market had been pricing in per the Fed Watch tool about 1 to 2 rate cuts this year. So it's now at 1 per the Fed. But the markets, honestly, they say, you know what? Whatever Jerome Powell says doesn't matter because if we see the economy weaken enough, he will then cut rates 2 times if need be. He's probably right. They're probably right in all fairness. Okay, so this was the yesterday move on CPI, monster move. This was the chop on the Fed decision and press conference. Ultimately, we ended down just a little bit off of the early highs. The markets in the overnight were going sideways to higher. This was following Broadcom's good results. We'll talk about those. They were good. Were they good enough to get the stock up 15%? And remember, it was a $700 billion company going into this earnings report, up about 15%. I'm not sure. I think it's because of the stock split. The stock split just automatically, like when and I want to make this clear, the algos, when they scan these documents that are released faster than you and I could read in a million years, like we couldn't read even close to as fast as these algos scan. As soon as they see the word stock split in it, they just jack the price up, and then all the retail players follow it because it has a tendency to be a lift to a stock. So in reality, just touching on Broadcom, and we'll get to the chart in a minute, Broadcom's revenues were up. Yes, and they beat, but it wasn't up that crazy. Their earnings were only up like 6%. Like in general, if you saw those earnings minus the stock split, you would have said, okay, this was a good quarter. But then you look at the stock chart and it was at all-time highs going into this report, and then it still goes up 15% because of the stock split. Same thing generally happened to NVIDIA. NVIDIA whisper numbers were basically in line with what they reported. Remember, whisper numbers are above what the analyst estimates. It's kind of like the secret number. But nonetheless, we came in at that number and the stock still went up because of the stock split. So this is just the way Wall Street works right now. When things are hot, it doesn't matter. Money goes into things and makes them go higher even if they shouldn't, and that's what's going on. All right, so what did we get today? Well, this morning we got PPI data to come out. Now, PPI, again, Producer Price Index, we did see a pretty precipitous drop in the PPI numbers. So I believe core was 0.00%. I think it had been anticipated to be at 0.3. So again, 0.3 or 0.3% was what PPI was forecast at. It came in at 0.0. So let me write that up. The forecast was 0.3%. It came in at 0.00%. So it was lower than expected. The core, remember, is removing food and energy. So that's what core is. And again, it gives people, like to be honest, it kind of makes no sense to me because food and energy is what costs most of us the most amount of money, along with housing. But nonetheless, because it's a little bit more volatile, they like to report it without food and energy as a core number. Now, the number for regular CPI actually came in at a negative, so deflation, negative 0.1% versus expectations, I believe, were I think it was 0.1%. So it was a good beat. It might have even been minus 0.2, but whatever it was a negative number. Now, again, wow, could we be in a deflationary market? You're going to hear the talking heads out there going nuts and nuts and nuts. Deflation, deflation. No. Listen, let's be real here. Oil in May was down 9%. Gasoline was down 9%. That is what is affecting the regular CPI data and bringing it down. Oil this month, just in the first half of June, is already up 6.5%. So again, next month, this number here, this regular number, if oil stays up here or even goes higher, will then go right back up. This one is going to be the one that we'll really focus on, the minus food and energy, and that's why they do the core number. So again, a lot of people don't understand the difference between core and regular, and I hopefully just kind of explained why the regular one is much more volatile because it includes food and energy prices that tend to move much more drastically. Like, think about this. Not that cocoa is a big component of the CPI or PPI data, but think about the run. I mean, the cocoa was up 100, 200% this year alone. Incredible run early in the year. It's come back in a little bit, but that again would affect. I mean, that type of move, you can't really say, oh, you know, inflation's crazy because of cocoa. It's like that's one little component. People have a choice. They can say, hey, I'm not going to eat chocolate. I know people that, by the way, won't say that and they'll always eat chocolate, but still, you could make a case for that. Now, the shocking number, guys, this was the kicker, right? So the shocking number to me today was this number, 200, let me write this out here, 245,000. What does that mean? That's jobless claims. Markets had expected 225,000. All right. Now, again, you might say, oh, it's only 20,000 more people filing for unemployment. But this number up here. This number here is the highest number since August of last year, so almost a year ago. In addition, we were in a zone of jobless claims being between 200 and 220,000 for the longest time, like literally 6 months straight, where it was like 211, 209, 214, 203. You know, those were the numbers. And now if you look at the last 4 reports, they've now all been either 220 approximately to 245. So there's a trend here in jobless claims that is going like this. Now, interestingly enough, you would say, oh, the PPI numbers, the market should be rallying because lower inflation, right? But the kicker is this. Bad news is now starting to be bad news. And a run-up in this jobless claims number is starting to make people say, wait a minute, could inflation be coming down because the consumer is struggling to pay for all the goods out there? I think that's the case. If you have 2 eyes and you just look around you, I think we all would agree that is the case. So that means that initially you saw a pop in the markets here to the upside. We traded as high as here initially on that CPI data, and then we came right back in. Now listen, net, the markets are still positive on the morning session because of Broadcom. The NASDAQ in particular is looking to have a good gain, but overall, the PPI numbers being as good as they were, they're not giving the same boost, partially because the markets kind of anticipated it after CPI yesterday, and then partially because it does appear more and more that the jobs numbers are starting to falter, right? Again, we didn't see it last Friday in the non-farm payrolls, but I'll almost go out on a limb and bet you guys that we see that number revised down from 275,000. I wouldn't be surprised if that number comes in closer to 200,000 at the next report when they revise it. All right, in any case, markets right now trading kind of slightly positive on the S&P 500. Let's go take a look at the US dollar. The US dollar is still net positive on the day. So again, this is the daily chart. This is the little candle for the dollar. The dollar had bounced more overnight, did come back in a little bit after that CPI data, but nonetheless, if we look at this is the line in the sand, right? Pretty clear. Trend line, it matches. It's a perfectly horizontal line. That's what we're looking at there. I think you could also do a line from here down to here that will give us a little bit of a wedge pattern. And then the question is, which way does it ultimately break? I'm in the camp that actually we're probably going to do this and break to the downside because, again, I do think the economy is going to weaken more and more. And right now, again, if we're expecting just one rate cut, any sort of weaker data is going to push the Fed to maybe do 2 cuts. The key is this, and always remember this, guys. This is one of the misnomers out there. The Federal Reserve, historically, when they start cutting rates, that's when the market actually starts to fall. All right, now you might say, well, how does that make sense? I mean, the market is praying for the Federal Reserve to cut rates, and they want it, and everyone's like, oh, once they cut rates, the markets are going to rip even more. Not true historically. And remember, guys, verified investing is about the numbers, about the data, about the truth. So again, you may hear from all these different analysts and stuff, oh, as soon as the cut, we're going to go higher. Historically, looking at history, that's not the case. And I'm going to tell you why. The reason the markets tend to sell off when the Fed starts cutting rates is because the Fed is already behind the curve, and the Fed is cutting once. Let's say they start 25 basis points, and investors begin to freak out and say, oh my gosh, the jobs numbers are plummeting and the Fed is too slow. They're behind the curve. And also they say, wait a minute, if the economy is going into recession, earnings are going to drop. So instead of pricing in all these PE ratios in a bull market where we are at like 30, I mean, if you look at the trillion-dollar names, I don't think there's one of them that has a PE ratio below 30 at this point. Now, historically, guys, that is ridiculous. That is like bubble territory. And we're talking NVIDIA's even in the 40s, I think 45. Now, granted, if they can maintain their growth, maybe it's justified. They're not going to maintain. They're not going to maintain margins of 77%. It's just not going to happen over the next 4 or 5 years. It's going to drop. But my point being is that when the Fed actually cuts, the markets go down historically. Now, does that mean that it's guaranteed that we're going to go down this time? No, nothing's guaranteed. I'm just relaying the data of what has happened in the past to you so that you can have at least some insight into what could happen in the future. All right. So on we go here. So that's the dollar chart, guys. As we go here real quick, let's flip over to the U.S. 10-year. The U.S. 10-year is a little bit lower today. This is a classic, what I call the scene of the crime retrace right here. If we zoom in a little bit, we can see again, and I went over this yesterday too, so I just want to reiterate, there was this beautiful wedge pattern. We broke, we confirmed, we continued, we came, we saw, we conquered, right back to the scene of the crime. And then down we go. And that's what I've been expecting. That's why members in Smart Money stocks and ETFs, we have the TLT, which the TLT, and I'll show you this chart. It's actually a cool chart here on the TLT. It goes up when yields go down. So if you start to expect yields are going to go down, then you start playing for the TLT to go up. Look at this beautiful channel pattern right here. I isolated this down. We actually bought right down here. Now we're up here, and then there's your breakout here, and yields should be up here today, up in that range. So again, just isolating charts. Remember, when I trade, I try to use the charts to tell me what to do. I don't try to overthink things very much. I think everyone overthinks a little bit, and you kind of extrapolate out and you see what's going on in the economy. I tend to be a little early on my trades. That's just the nature of the beast because I see what's coming and I want to position ahead of it. But nonetheless, this is, again, a classic channel. I saw this lower level, which gave me the support. I saw the macro data starting to weaken, which means yields coming in. I looked at the 10-year chart and got in right down here, up, boom, and breakout right there. Beautiful little trading opportunity from Smart Money stocks and ETFs. All right, stocks on the move today. Take a look at Broadcom. Look at that move, guys. And again, their earnings were very good. Don't get me wrong. But again, the stock was trading at all-time highs already. Now it's up 15%. Now, there's a level here, and notice how, so this trend line, remember this trend line here, we're just above it by a little bit, but I'm going to show you where I'm getting this trend line, and I actually think the stock will trade back below this today. And what it is it's a channel, right? So basically, if we look at this, we can see that you take the lows of the chart here, 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 and here. And notice, by the way, that we had a channel on that TLT chart that I used to my advantage, too. So here we have the highs here, and then the high right there. And so the idea is right up here around 1700, there should be some resistance on Broadcom's chart. That should be a short-term high for a pullback. If history repeats, what happens, right? So you go up to the high end, and then you go to the low end. So if we're going to open up here, maybe over the next month or two, you see price coming back in towards the low end of that channel as it goes out. And again, that's just classic channel trading, one of my favorite things to do. You guys probably see it literally 5 times a day when we look at this. Now let's talk Apple. Apple yesterday, first of all, the insanity in Apple is like, I mean, you know, NVIDIA's NVIDIA. At least they have the growth. But again, the Apple scenario here, where Apple literally gained, what, like $400 billion in a matter of 2 days from this to here, and that was after the sell-off, after they announced that they were incorporating AI into their systems, which every phone company's or every phone maker is going to do. But this run was nuts. But the thing is, look at the line where it went to. This is why trend lines just literally blow my mind. if we look at this, right, here's your high, and where did we go yesterday? We went right to that line, and then as soon as we hit the line, we pierced 220, even number, and that was the line, and we sold off $7 in a matter of 30 to 40 minutes. Incredible. And by the way, everyone out there, understand what's going on right now. So Apple talked about this incorporation of ChatGPT. To be honest, it's nothing proprietary. It's nothing crazy. It is what it is. Every player is going to do this for every phone. Google's going to do it. They're all going to do it. Initially, after it sold off. The analysts and the big institutions, they said, you know what? We need to unload a lot of Apple. We got to start a buzz here. I don't like the fact that, or they didn't like the fact that it sold off there. Like, how do we get our exit liquidity? Well, we have to start getting our analysts out there to talk it all up. And get crazy and pump this stock up. So the analysts came out, all of them are saying, oh, this is now the biggest thing since the iPhone debut. Okay, yeah, okay, that's I'm sure that's real, right? But the point is that then they caused this hubbub where all of a sudden price started to go parabolic, creating all this exit liquidity, massive volume on Apple. And then what happens? Boom. The big boys started to sell right at that level and dump into it. And this is the type of stuff that happens at highs of charts, folks. It just does. The exit liquidity, they need these big players that are holding literally hundreds of millions of shares of Apple or tens of millions of shares of Apple. They need that exit liquidity. They want one last pop to pad their earnings, pad their pocketbooks, and they pump it up, and then they dump right into you. Just understand it. It doesn't mean you can't trade it. But again, don't be the person going long up here that's FOMOing in. We've seen that on Bitcoin at 69,000 in 2021. Don't FOMO. All right? It just, listen, sometimes it works out. More often than not, you get caught holding the bag because it's other players, bigger money, getting you pumped up, spreading the hype all over the social media sphere. All right? Getting you to get in only so they can dump into you. Let's remember that, guys. All right. Oh, wow, man, today's flying. All right, last two charts I'm going to show you guys quickly. Take a look at this. Caterpillar, if you want an economic indicator, watch this chart. It's already broken down here, and it's making a bear flag. It's going lower. If Caterpillar's going lower, the economy's going lower. Just that simple, right? All right, next up, lastly, I'll put up JP Morgan. Look at the breakdown on JP Morgan in play here. Trend line, pivot low, breakdown right there. There's rumors out there that there's trouble in the financial banking sector with all the CRE loans, commercial real estate stuff going bad because there's so many vacancies. Mortgage-backed securities that were packaged at rates when they were 3% are way underwater. And banks, the big banks are starting to dump these. I don't know if anything will come out of it. The Fed yesterday, Jerome Powell said no big deal. It's nothing. Of course he's going to say that. He's not going to freak out the markets. But just keep an eye on the banking sector, guys. Something may be amiss there. All right. On that note, man, we're running behind here. I'm going to do my best to get through everything. Let's quickly go and do our drawing. Yesterday we had NordVPN. NordVPN was the winner yesterday. So someone today will win a 1-year subscription to NordVPN for free. Let's see who it is, and then we're going to spin the wheel, go right into our next segment after we play a great commercial there. TBKI1UX. So, again, Killux, TB Killux probably, but well done. Contact Lawton at verifiedinvesting.com. All right, we're going to speed things up here. You guys thought I was going fast already. Let's do it. All right, what's the next winner here? Oh, this one's going to be a good one. 1 minute scalpel, baby. 1 minute scalpel. So the 1 minute scalpel's done. He's an actual ER surgeon, guys. Amazing. He came from the ER. He's using all his abilities. He's studied charts for years at this point. He came up with these tactics. I use them to trade every day in the Apex Live Day Trading Room where he's with me as well. If you even want to check him out, by the way, and before you even buy the 1 minute scalpel, which is only $299, but just an idea, come in, join for a day. You have a 1 day pass to the Live Day Trading Room or join for a month. You guys will see it in action. People that are in there buy this because they know it works, and I know it works because I use it. So great course. Check it out on verifiedinvesting.com. On that note, we're going to take 30 seconds to do a quick commercial to Smart Money Stocks and ETFs. Take it away. Hey, everybody. Welcome to Smart Money Stocks and ETFs. My name is Gareth Soloway. I'm a verified pro trader here. 25 years of experience. I've been through it all from the dot-com bubble through the Great Recession all the way to the current markets. In this service, you're going to get chart posts 24/7. When I see something morning morning, noon, or night, or even on weekends, I'm posting up the levels, giving you analysis and everything you need to be fully informed about the truth, the data, the technical analysis within the markets of stocks and ETFs. In addition, you get exact entry and exit signals from me with suggested portfolio, position size, everything you need to conquer this market and make money for the long term. All right, guys, we're back. No time to waste. I'm going to talk like an auctioneer here. No, just kidding. We'll take it medium speed. But Bitcoin yesterday had the shot to make a big move. It didn't. That's a little bit concerning, right? So the one thing I'll just mention here on Bitcoin is yesterday it was up quite a bit. We know it hit support, but it was up quite a bit. It gave it back. Today it's giving back a little bit more. That's not really what you'd like to see. Now, having said that, take away all of that information. Just look at the pure simplicity of the chart. As long as it holds this line, it's still net bullish. But again, there's levels of bullishness. And if you're a bull, you're not super happy that it performed like it did yesterday and is down slightly today. But as a technician, if it closes below this line, run for the hills. As long as it stays above, you can potentially still see upside. All right, simple as we can do right there. Ethereum, real quick, guys, just going over Ethereum. Ethereum, we know, broke below this key line, bear flag right there, then broke down, giving up everything it gained yesterday. I got to be honest, guys, I'm leaning more and more towards Ethereum coming here, right on the chart around 3,200 to 3,100. You have an upsloping trend line here, right in this zone here. That's where I'm looking to buy Ethereum if it gets flushed down there. Again, probabilities now starting to favor it as price comes down. Keep an eye on that. Next up, gold. Gold today, I changed up how I drew my charts just to give you guys a little bit of a different look. Here's a channel, right? So you could make a case that this is a sideways consolidation bullish channel, but you are starting to make a bearish in spirit of flag pattern right here. And again, that would just be something that you'd want to watch. If you break here, if you break this line, which is around 2280, then you have to think you're going down here. And that's where I'm going to start to accumulate. I do actually think that gold still has a little bit more downside, but again, 2180, I believe. Yeah, 2180 is the approximate level that I'm looking for on the gold chart. On silver, real quick, silver still within that channel here, downsloping channel. Here's our key technical level here, very, very close at this point. That is the beginnings of an accumulation zone, but don't be surprised if it breaks that as well, which is why accumulation is done over multiple buys. I still love the metals on the longer term basis, but I'm going to slowly inch in at this area, and then I have a level down. I think it's around 2550. If we get down to 2550, that would be a fantastic level there. All right, looking quickly at oil here, guys. Let me just bring up the chart on oil. Oil, I have a little bit of a different draw on this as well on oil's chart. Again, there's still a lot of resistance up here. I actually like it as a short, but just in case we go a little bit higher, there is a secondary level right up here that would be a fantastic little shortable level. You can see all of these lines connect right through this midsection right here, and then that would be good resistance. So again, overall, from here to here, I think I am net bearish based on the charts, but this would be the big kahuna right there. That would be where you would expect some good downside. All right, and then lastly, we'll just go to natural gas. Natural gas here is pulling back again off that kind of pierce a double top. It did make a higher high, but notice, ask yourself, did it confirm? The answer is no. It closed above. Closed above is good, but it's not confirmation, which is what I teach in the Winning Trader series. By the way, guys, late July, I'm going to be doing a major sale on the Winning Trader series. So again, be ready for that. That's going to be a steal of a deal. Watch for that probably in the second half of July, about a month away. All right, so what do we have here, guys? Kind of still a bearish bias on this. I'm looking for a level here that at least a pullback into this zone here, and then potentially even a retrace down into that area. Those would be two key supports on natural gas to keep an eye on. All right, guys, I got to get to my trading floor here because, again, there is action this morning. As always, thank you so much for tuning into the game plan this morning. I'll be back with Trading the Close at 3:55 p.m. today. And as always, folks, you guys rock for tuning in and supporting me and supporting Verified Investing. I seriously love you all. Thank you so much. Have a great one. Take care.